Hi everybody, I'm Jenn Campos and I have Michael Campos here today from San Diego Funding. Hey, I love your last name, by the way.
Yours isn't too bad yourself.
Hey, thanks for coming today to chat with me. You know, we've got a lot of questions really around mortgage rates. Buyer demand is up right now from the beginning of the year, way earlier than our spring frenzy. And we can really thank the stock market. S&P was up almost 30% last year, but also mortgage rates. You know, the burning question is, what are rates doing? So can you give us a little insight of kind of where rates are for conforming and non-conforming 30-year fixed?
Sure, I'm happy to help. So this month, rates have been pretty stable from last month. There's a lot of forecasts that say that the 30-year fixed mortgage rate should land somewhere in the 3.8, 3.9 interest rate range. But with the China trade war that has taken place and now some of this Iranian topic, our interest rates have been floating around 3.75, sometimes as low as 3.625, depending on the customer's equity position and credit scores.
That's super cheap money. I mean,
yeah.
Even a year ago, they were kind of ticking up in the 4 range, right?
Right.
Wow. So completely answers my questions, like why we're seeing so many buyers coming to the market. You know, ARM mortgages. Do people do ARM mortgages now? And if they do, what kind of rates are we looking at there?
You know, for the adjustable rate mortgages, the ARMs have been floating in the 3.1, 3.2 interest rate range in the last few weeks. Earlier last year, they were in the 2.75, 2.8 to 3% range. You know, those loans are a little bit used a little bit less frequently, primarily because of the fact that the 30-year fixed is still super low. It's
very
just it's a
competitive.
very competitive loan. The banks do underwrite the ARM products more conservatively. So at the end of the day, it's easier to get a 30-year fixed approved than any other loan program out there.
That's good to know. Now, first-time home buyers, we have a lot of first-time home buyers. What are some things they need to know before really kind of doing their search?
Well, they need to know what their exact loan qualifications are. If you are 3 months or even 6 months from purchasing a property, I highly recommend you apply for a loan as if you're buying today. That way, if you are simply pre-approved, then you have a pre-approval in hand and you have plenty of time on your side to find a property. If you apply for the loan and you might not get the best loan approval, now it gives you 3 months or 6 months to plan and strategize to improve your application so you can have that really good pre-approval letter when the time is right to buy.
Now, I think, you know, back in the day, there were some incentives for first-time home buyers. Are there really incentives still?
Well, the incentives for a first-time home buyer, aside from the income tax benefits, is that we have a really low down payment 30-year fixed. The incentive used to be that we could use the FHA loan program at 3.5% down payment. Now, FHA still has its place and it's still a great loan solution, but now we have a conventional loan program at 3% down. So a slightly lower down payment, but on top of it, the expenses on a monthly basis and the expenses to acquire the loan are far much lower than compared to the FHA loan.
That's very helpful. So FHA, VA, when we talk about those type of loans, I mean, they are appealing for down payment. You know, for those who qualify, tell me a little more about VA. I know it's becoming, you know, a little better to work with nowadays.
So VA used to have a really negative reputation that when a veteran or active duty was buying a property, they had to negotiate with the sellers that the sellers had to pay that service member's closing costs.
Oh, right.
That is a false statement. It's not a requirement. It could be a negotiation.
Sure.
But right now, the sellers have traditional closing costs associated with selling a house to an active duty or veteran. Mm-hmm. And on top of it, the veteran can finance up to 100% of the sales price, irrelevant of what that sales price is.
Sure.
So for example, if a veteran's buying their first home and it's a $400,000, $500,000 house, they can finance 100% of the sales price. If the veteran is purchasing a $1.5 or a $3 million house, they can finance up to 100% of the sales price with no private mortgage insurance and still get the lowest interest rates out there.
Wow, that's fantastic. You know, in San Diego, in and around San Diego, really, we've got a lot of self-employed borrowers. You know, and you're really good about looking at other options and strategies for these borrowers because they don't fit into a box and
Yeah.
it's not a one size fits all. So what do they need to know when they're going to start looking for a new home or refinancing?
What I can tell a self-employed buyer or refinancer is that your income tax plan might not fit inside the box as a traditional bank might require,
Sure.
especially when it comes to adjusted net income, 2 years tax returns, all those formulas and requirements. Sometimes you just might not fit. We have portfolio loan products that ignore tax returns and utilize your bank statements. So we still follow federal regulations with regards to their requirements, but we use 12 months personal bank statements or 12 months business bank statements to document your income to help you get your loan approved.
Very cool.
Yeah.
Lastly, I know, the burning question, you get out your crystal ball and you kind of look forward and so do you have any insight of what we're going to be looking into 2020 with rates? Are they going to stabilize, go up? What are your thoughts there, especially going into an election year?
Yeah, it's a unique election year. I think that there's a lot of consumer confidence in there. Consumers feel safe about purchasing real estate because the market has been stable. The down payment requirements are easy to accomplish without it being a zero down payment loan.
Sure.
And consumers feel really good about their income. The average FICO score in the United States right now is 707 FICO score.
Wow.
So people have been really taking care of their credit the last handful of years. And I think that because most loans that consumers have been funding in the last almost 10 years have been mostly 30-year fixed loans,
Mm-hmm.
even if there was a hiccup in our overall U.S. economy, everybody's payment's going to be the same.
True. Yeah. Well, thank you. That's very helpful. I'm glad you came by and chatted with us today. If you have any questions for Michael, I will be putting his information up there for you. But also feel free to contact me. I'm more than happy to help you.